Good afternoon, and thanks for tuning into the latest Autotrader webinar with V12 Vehicle Finance. I'm John Kerwin, editor of Autotrader and your webinar host today. Today we're looking at how dealers can better understand consumers and their buying behaviour. COVID has had a major impact on the way consumers buy cars with a big increase in digital activity. Today we have V12 Vehicle Finance and senior management from iVendi, Codeweavers, Autotrader in association with Autoconvert and Dealtrak, who will talk about consumer buying behaviour and help dealers drive more business to their websites and showrooms. Before we kick off with individual presentations, I'll do a quick intro for each of our panellists today. We have Tamara Brown. Tamara is Head of Partnership with V12 Vehicle Finance. Tamara has been with V12 since 2020, initially in charge of sales before becoming Head of Partnership for the Motor Division. Her aim simply is to make funding as straightforward for dealers as possible using highly automated systems. She's previously worked with Mannheim, Mazda Motors and Ford Credit. We also have Nick King. Nick is well known. He's Insight Director with Autotrader in partnership with Autoconvert. Nick's a digital media and marketing expert. He helps dealers to find new customers and keep them through digital and online channels. He joined Autotrader in 2007 and has built up his successful retailer insight team, running masterclasses and webinars. Also on board, we have Jana Jones, who is Vice President Marketing and Communications at iVendi. She oversees the marketing operations of iVendi. Originally from the USA, Jana has over 13 years marketing experience, holding senior positions for multiple international brands. We have Alan Cooper with us. Alan is Sales Director, Affiliation and Partnerships at Codeweavers. He's got over 20 years experience in the motor trade. He works with lenders, brokers, dealer management systems companies and CRM providers. And finally, we have Martin Hill, Group Director of Strategic Partnerships at AutoProtect and Dealtrak. Martin is experienced in driving improved performance via online and offline F&I strategies for the car sector. So that's the panel. Today, I'd like the webinar to be as interactive as possible. So if you have any questions for individual speakers, just fill them in and we'll address them in the Q&A at the end of the session. And for those listening in today, we have a poll on key issues impacting dealers. We have two polls, in fact. Please take part in the polls and we'll see the results as they are revealed throughout the webinar. Now, to our first speaker today, Tamara Brown, Head of Partnerships with V12 Vehicle Finance. Tamara will give an overview and some background of where she thinks the market has changed over the past 2 years and point to some changes in the future. Over to you, Tamara.
Thank you, John. A very warm welcome to you all listening today. Thank you for joining to this, our first V12 Vehicle Finance webinar in association with Autotrader, where we will discuss the topic with the headline, Consumers Are Time Poor. How can dealers better understand consumer buyer behaviour? So a bit about ourselves. Here at V12 Vehicle Finance, we are not in the business of selling cars. We are in the business of helping dealers to drive more business to your dealerships through highly automated digital partnerships. In the last few years, we have seen a significant change in vehicle sales channels and the finance market, and this is set to continue. The pandemic has forced you as dealers to look at your sales models and how you service your customers remotely. This in turn has given consumers confidence to buy online, a very much growing trend. This webinar today will demonstrate what our V12 partners are doing to make the online consumer journey smoother and to give you, the dealers, important insights and takeaways. But let's first look at how the landscape has shifted and changed since the pandemic. So how has consumer behaviour changed? Well, there's been a complete transformation in the working patterns to more hybrid, flexible working, with people being uncomfortable to travel on public transport. The trading environment has altered as well, with a need to offer consumers a full online purchase experience. Consumers are more environmentally aware, and of course, the pure lack of quality used car stock is challenging us all. So how do we at V12 support dealers? Firstly, we offer full online consumer journeys, and we've built integrations between the 4 main partners today that you're going to hear from, offering our dealers choice of who they wish to work with. We offer the choice of bespoke branded finance calculators on dealers' websites. And as a finance partner, we cover a diverse credit score range of UK consumers, super prime to near prime, whom themselves as a group make up around 30% of UK adults. Consumers want the choice between signing on or off premises, and we cater to their needs. As a finance partner, we conduct soft search on consumers, meaning they can apply to us safe in the knowledge their credit score is not affected. Consumers want an omni-channel retail journey, a mixture of online and dealership interaction, which allows them to take control of their car purchasing process. Dealers who win in a busy marketplace start by putting themselves in the consumer's shoes. Surveys show people generally don't enjoy the car buying experience. They don't trust car salespeople, and they don't like the negotiation process. Recognising almost a third of car owners intend to buy a car this year, the opportunity is significant for you as dealers. So let's take a look at what consumers want. Consumers want fast finance decisions, and you as dealers demand this too. Consumers want flexible credit options, so they want to have a choice of finance products. They absolutely want the option to shop around for a vehicle and finance from the comfort of their own home. Consumers are time poor, so the flexibility in signing documentation remotely to speed up their buying cycle and process is key. At V12 Vehicle Finance, we support consumers in all of these ways. Importantly, we've built integrated technology with our partners, who you will hear from just shortly. So thanks again for listening, and back to you, John, to introduce our guests.
Many thanks, Tamara. And now quickly to our second speaker. Nick King is Insight Director with Autotrader in partnership with Autoconvert. Nick will look at some of the changing patterns of consumer behaviour in today's digital environment. Over to you, Nick.
Thanks, John. Lovely to see you all. I'm just going to share my screen. So great to see you. So I'm going to talk to you about how the world has changed. John, I think your mic is still on. From consumer behaviour to digitisation. So we've been through quite a lot of changes. It's accelerated what we're used to. So let's have a quick look at consumer behaviour, what's been going on. It's impossible to look into the future. No one can see the future. It's impossible to predict what's going to happen. We didn't predict or see the fuel crisis in September in much the same way we didn't predict or see COVID. I was doing some work with Ipsos in 2019, and they said, did a massive sample of survey into what do people see as a threat to public health, and no one said infectious disease. Most people said chronic disease or lifestyle. But of course, it has had an impact on us. It has had an impact on how we feel, because how we're feeling has an impact on what we do. In a study from 2011, judges were seen to be fallible and flawed. They're human beings after all. If you're up for parole as a prisoner against a judge, you're less likely to get parole if they're hungry or tired. That's completely unfair. Surely a judge should be completely linear. But no, they're human beings. So what's going on around us will have an impact on all of us. And of course, a lot has been going on. We have all been through a mass-forced experiment. You could call it a mass-forced tech adoption. Example A is the webinar we're on now, or the Zooms calls, the Teams calls we've all done. And this has dramatically changed the speed of adoption of new technology for all of us. This is a picture of my family doing the Zoom calls we all did in lockdown. But what about those prior barriers to tech adoption, which we always had, which could have been your IT department saying, oh, no, we can't do that because of the firewall, or we've already got contracts in place. Well, what happens when you have the irresistible force of a lockdown and remote working colliding with those prior barriers? Well, what happens is those barriers fall away, and we see adoption of technology in days or weeks, not months or years, none so than our amazing NHS. And this plays havoc with our brains. And I've been studying brains for years. I'm a consumer psychologist. I'm fascinated by it. We have two parts in our brains. You have your primal brain. We all have one. And we all have a rational brain too, which is a lot younger in evolutionary terms. And the primal brain keeps us alive and reacts to stimuli that's going on around us. Noise, sound, touch, taste, smell, all of these things. And we like this. As human beings, we're quite lazy and we like things to be easy, as Tamara hinted at. If it's easy, it works for us. But we're having to live in a lot of a rational brain world at the moment because there's lots of choices we have to make with jabs and masks and not going on holiday, etc. But really, we liked as humans to have a primal brain experience. Really, it's this kind of theatre. Primal brain is all about yourself. Something that's visual or memorable. Imagine you've been driving for an hour and a bit and you pull in and you're a bit tired. And you think to yourself, I can't remember anything about the last 20 minutes of the journey. My word, was I asleep? No, hopefully you weren't asleep. But nothing contrastable to the norm happened. Contrastable could be someone pulled in front of you. Visual is the lights go on, and memorable is, oh my word, I might crash, but nothing happened. You're okay. So this is basically theatre, and it's easy to use. So your message today, and I don't mean to be facetious, whatever you're selling needs to be simple enough really for a 4-year-old to understand it, because a 4-year-old only has a primal brain. In human beings, the rational brain develops age 5 and onwards. But up to age 4, we've only got a primal brain. Picasso, the talented artist, said, all children are talented artists, but as they grow and develop and rationalize, many of them get put off and stop drawing. But go to any household that's got 4-year-olds in it, and you will see scribbles and drawings on the fridge and the cupboards in the kitchen. I did it, my kids did it, my grandkids did it. So here is a typical 4-year-old. Well, this is a very old 4-year-old. This is me, aged 4, in black and white. Yes, I'm that old, on my Massey Ferguson tractor. So what would be the most effective way to make primal brain sit up and take notice? Well, I'm now going to show you a video for a shirt. It's from As Seen on Screen. It's £25 and it's a shirt. A shirt. If I can buy a shirt and it's visual, it's tangible, it's emotional, it's all those primal brain friendly things. If I can have a video of a shirt, surely I can have a video of a car or something more complicated. Because the best retailers are, of course, answering, and you are them, detailed questions online and fast. None of this is rocket science. You're all experts. But the world is changing. We're spending more online now. If you go back to Q2 2019, before COVID, online spend as a portion of retail, as a portion of online, was about 18%. It jumped up in lockdown, Q2 2020, that was March, bang, we're all locked down, but it hasn't really come back. And the United Nations call us the fastest growing digital economy in the world. We get it here. And despite being shut, you managed to sell 90% of normal volumes, which is astonishing because you're experts. When we took a large sample of car buyers and suggested a completely transparent online solution, the Kazam, Kazoo, Cinch, complete online solution with to car buyers, they said, yes, I find it appealing. Not everyone wants to do it, but 72% said, yes, I find this appealing. So we like the idea of online retail. And actually, the acid test, which we always had for car buying, which was the test drive, 60% of consumers said I would buy without a test drive if I had a money-back guarantee. So in other words, I feel safe and it's easy. Now, we know that 2/3 do like doing stuff online. And there is more choice now than ever to do it because digitization seems to have taken off. This complicated chart is easy to read. The grey columns are 2019 prior to COVID, and the blue and red are throughout COVID. And you can see what more people are doing now since we've been in lockdown. Click and collect has massively grown. Home delivery, massively grown. Video chat, walk around, massively grown. You can see the others are still growing. So we're into this. And actually, some of the key functions of purchasing a car, like part exchange, reservation and payments, have more than doubled since 2019. So we're all doing a lot more of it. And if you do adopt digital retailing services, you can be 1.5 times more likely to be more efficient. So it's worth doing it. When you look at who's doing it, who's just got a digital first product, around 5% of the 0 to 7-year-old cars have been sold by them. But that's a 10% increase in 2 years. So there is interest. So these are the forces that have changed. These are the forces of change, really, that have made this auto industry develop. And the key to winning is using tech, data, and partnerships. They're really the key to success. So here's how we see digital retailing working. In its most simple form, it's a combination of the major components that allow consumers and retailers to complete as much of the car buying journey online as possible and fix the things people find the hardest to do. From researching, finding, comparing. We're running a beta test for finance applications on Autotrader today with several retailers, allowing consumers to check their eligibility and apply for finance with a retailer's lenders and receive a decision in real time. This is supported by our Autoconvert finance management and CRM platform. Autoconvert now have finance integrations with almost all lenders. And we're trying to make it primal brain friendly. Easy. Finance applications are automatically responded to on the retailer's behalf and sent to the most appropriate lender on their panel in real time, saving them huge amounts of time and effort. Also works in the showroom too for, true bricks and clicks and omni-channel experience. And we use this data and tech to power our finance offering. We're now seeing almost 50 finance interactions every single minute. So that's how it grows. It's about doing things together. It's about partnerships. So we work with bodies all across the industry and wider, sharing data and insights and working together on tech solutions to make the buyer experience more consistent and transparent, primal brain friendly, and to help businesses become more efficient. And if we get this right, it's great for consumers because it's easy, it's transparent, it's convenient. So again, primal brain. For retailers, it's quick and it's efficient. Again, primal brain. And for lenders, efficient, you get more business. And actually, if I can pre-qualify myself earlier in the whole process, you might reduce the risk for lenders too. So that's it for me. Thanks very much. I'm now going to hand back to John.
Thanks, Nick. That's great. Now, next up, we've got John Jones, who's Vice President Marketing and Communications at iVendi. John today is going to look at connected retailing and creating a better buying experience. Thanks, John.
Thank you, John. And good afternoon, everybody. There we go. So we all know that online retailing is and has been on the rise in the automotive sector. Buyer expectations have leapt forward since the pandemic, and what was once a reluctant motor industry engaging with the online world has shifted to a sector that needs to embrace change while navigating all the complexities that come with vehicle retail. Digital disruptors arriving in the motor retail space have caused quite a stir. They are investing millions of pounds in advertising and online infrastructure in an effort to grab a share of the used car market. They are growing fast while giving the illusion that a pure online retail journey is a great, seamless customer experience. But behind the scenes, it is quite chaotic. And we've seen the results of some of that chaos in the news recently. The reason it is chaotic is because vehicle retailing is complex. Nonetheless, consumer demand for online vehicle retail is on the rise, and consumers will migrate towards more digital journeys as and when they become available. The pace of change is accelerating faster than ever. Big tech companies like Google and Amazon are getting more invested in automotive. And we believe these companies will have a greater part to play at the start of the vehicle buying journey going forward. According to Google, 90% of consumer vehicle purchases now start with online research, and their latest innovation in online retailing is the new vehicle ads format. Google launched this service in the US in March of this year, and it essentially takes buyers straight from the search query to the vehicle details page on the retailer's website, without any intermediary. They keep testing this, and it is getting more and more iterative as they go. Google has the potential to significantly disrupt the journey, like they have done already with Google Flights. It's important to understand that the rise of online-only used car retailers is both a reflection and an accelerator of wider digital consumer activity. Buyers are realizing that the way they've been transacting online in other retail sectors is now possible when buying a vehicle. But there are loads of challenges when it comes to retailing vehicles that you don't get when buying other products online. How do you deal with negative equity? How do you deal with part exchange, settlements, customers who want to negotiate? How do you sell value-added products online? And of course, what about the challenges that electric vehicles bring? There are compliance and information security issues when selling vehicles online. What happens when a customer does an online application and it gets declined? Does having every step of the finance commission detailed make things look unappealing to the consumer? What is also apparent is that more lenders and brokers are having to give rate for risk products to consumers. This means the rate a consumer may have seen initially online could change later in the journey. How do you get that consumer acceptance in a pure online world? There is no magic solution that solves all of these problems, and OEMs looking at agency models will have all the same challenges. But we think the answer to all of these challenges is connected retailing. But what does that mean? Connected retailing is all about using the right technology to connect the online and showroom sales processes and create a seamless journey for buyers, retailers, and lenders. Many people think online retail will follow a standard linear conversion model, but we don't see it that way. The journey is divergent. But according to our recent white paper on addressing the challenges of digital transformation, this has manifested itself into three main buying groups: online buyers, channel hoppers, and in-person shoppers. Pure online buyers are happy to complete the entire buying process online from research to delivery. This is a growing segment of the market, but it is still the smallest, with only 5% of buyers choosing a fully online experience, according to Deloitte's 2022 Global Automotive Consumer Study. In-person shoppers prefer an entirely physical process with the full showroom experience. These buyers take the longest time to go from research to purchase and come with the highest operational cost. And the biggest segment, channel hoppers, are those who will begin the purchase journey online, but switch to a traditional physical experience at some point along the way, and may well continue to switch between digital and physical channels until the purchase is complete. This creates a massive opportunity for traditional retailers to grow their business through digital solutions. At the moment, the online-only retailers can't cater to 100% of consumers. We've heard anecdotally that if you are a customer with complexities, outstanding finance, etc., there is a break in the journey. And not all buyers want to buy online. Many still value the expertise and support that retailers can offer. So how do you cater to all buyers, whether they want to buy online, in person, or dip in and out of the digital sales journey? With a solution designed to provide consumers with compelling online shopping experiences that work just as well for customers when they enter the showroom, maximizing outcomes for the retailer and customer across both the online and physical sales channels. We have evidence that suggests 45% of all finance applications will be made online this year. This is a massive shift from where we were just a few years ago. And we know that the majority of people browsing your website will do so between the hours of 6 to 10 p.m. However, the majority of online consumer finance applications will take place between 9 a.m. and 5 p.m. If consumers are on your website after your dealership is closed, and a good proportion of them are happy to complete their finance application online, why are the majority of online finance applications being completed during business hours? There are two possible explanations for this. One is that buyers simply want to sleep on it. The other is that they need some kind of help or reassurance before proceeding. So traditional retailers have still got a part to play, with the majority of customers ideally choosing to follow a blended purchasing journey that includes both physical and digital elements. Traditional retailers have two very real advantages over online-only retailers: your showroom and your people. Sales staff are experts in listening to what the customer wants and then finding the best vehicle for their needs at the right price. And having a physical presence offers the opportunity for buyers to look at the vehicle in person, something that online-only retailers are almost uniformly unable to provide. This remains a reassurance to the vast majority of buyers. There are a lot of challenges to selling vehicles online, but there is also a lot of opportunity. It is all about providing the right consumer experience and offering options to allow buyers to choose the right buying journey for them. Established dealers have an on-the-ground presence that gives them an advantage over digital disruptors in several ways, but there is little question that the latter will change customer expectations about the online experience. In order to compete successfully, the majority of traditional dealers will need to be able to offer something comparable, providing a seamless digital process that makes buying a vehicle extremely simple and easy. It is about empowering the consumer to transact in the way they want to, whether that is online, in the showroom, or a mix of the two. It's about providing retailers and customers with online buying capabilities that translate into streamlined showroom experiences. This is connected retailing. And the technology needed to do this is accessible and cost-effective for all retailers. By connecting the online experience with the in-store experience, dealers have a unique view of the customer journey and the associated sales processes. The ability to connect the dots between online and in-store is unlocking many efficiencies and providing retailers with the ability to create a seamless and effortless, high-quality customer experience that occurs within and between contact channels. As the digital disruptors change the shape of the used car sector and help to accelerate the move to online retail, emulating their approach may not be a choice, but more of a necessity. Because of the increased competition the industry is going to face over the next few years, the question facing retailers may perhaps be, can you afford not to be a disruptor? So that's it from me. Thank you very much. And back to you, John.
Sorry, our penultimate speaker today is Alan Cooper. He's Sales Director, Affiliation and Partnerships at Codeweavers. Alan will look at how consumer buying patterns change depending on the age of the car. Over to you, Alan.
Excellent, thanks, John. Let me just share my presentation. Okay, so as Jana and Nick have gone through, consumers are very comfortable about the idea of buying online, and we can see from this study through eBay and Amazon that in America that they are very, very happy. Around $4 billion dollars were spent during that period of time, and they were happy to move forward with that. With lockdown, it accelerated everything, basically, the demand, the surge. And what we've seen is many major manufacturers and dealer groups jump with this, and independents. And what Codeweavers saw was a number of media companies give the opportunity to dealers and to independents to allow them to buy online and to sell to consumers. But what we've also seen through the studies that are out there at the moment, that even across Europe, 8% of people are quite happy to buy online. And have bought online previously. A further 25% will happily go and buy in the future online. And that is across all sectors of the market, being age groups, being from 18 to 24, even through to the older generation, who are 55 and plus, who will happily, if the right information is provided to them, will actually go through and purchase a vehicle through that. So is this trend as strong with older vehicles as it is for new? Consumers are historically less confident about buying older cars online. They kind of lack that confidence. What we've seen is that an older car is more of a touchy-feely kind of purchase, but they would be happy to agree a price online and part with their cash, but they would really, 25% would really like to basically view it. So as Mason Edwards said, reliability is always the top concern for buyers, but mainly struggle to assess it, particularly when buying something that's used. So what we've seen is that advertisements aren't always best suited for the modern consumer needs. And as Nick mentioned earlier, images are taken from further away. They're very, very poor quality. There are no videos, there's no neutral background. And what we see is dealers are trying to sell a vehicle with 4, 5, 6 images, no video, limited information, and that doesn't promote confidence when doing that. So 94% of page views and relevant images, more page views with relevant images than they are without. Being able to visualize a product outside of its virtual environment is one of the key factors related to using imagery. So there's a poll that we put. So how do consumers judge a great deal? Is it based on ease of process, level of trust, price paid? And what we've done at the end of the presentation, we'll show how a consumer feels against how the dealers feel. So the best practice for online sales, to invest in the production of a quality content and to improve credibility and the trust. So as mentioned earlier, extensive imagery, interactive experiences, details and imperfections and faults. What we have seen with the likes of Kazoo and Cinch is if there is a small blemish on a car or in any such way, they will tell the consumer, because when a consumer visits your showroom, he or she will see that. So why can't they see it online? Clear pricing and great finance options are also available. The trade-in valuation is strong. Reviews are excellent, and a comparison tool between multiple vehicles is also really, really good. High quality vehicle adverts lead to more consumer confidence. The more professional design of the website, the more likely users will feel comfortable shopping on it. Some users pay little attention to appearance, but others made instant judgments based on what the site would look like. What we've seen a number of dealers, independent dealers out there, adding buy online to their websites, but their websites aren't able to cope with that journey. And the information they're supplying on that website isn't also able to cope with that journey. Consumers want more flexibility. As Nick mentioned earlier, they want to know that they can get their money back in 14 days' time. They want to have the guarantees in place so that basically, if something does go wrong, the dealer is there to help them and help them through that process as well. It promotes confidence and it will build a lot of trust with the customers. Consumers want to buy online, but they also want to interact with the retailers as well. And what we've seen is that this is quite a high-priced journey, and if they worked all the way through that journey and are able to tell where they're at that journey, it's very, very important. So when they're going through their part exchange, where they're reserving their vehicle online, also when they're going through their finance options as well, they want to know where they're at. Once they've filled in that application form, they want that instant answer back to say, yes, you've been accepted, or we're working on your current finance option. Once that's completed, they want constant emails to go through that. A consumer expects to be able to purchase their next, 69% of consumers expect to be able to purchase their next car online. 94% of consumers require a seamless and simple and efficient ordering process. The retailer is essential to this. Consumer considers personal touch points, as I mentioned earlier. They want information at every individual point of that buying cycle. And a consumer would prefer to purchase, 23% of consumers would prefer to purchase a car without any in-dealer involvement. But once they have any issues with that buy online process, they want to be able to speak to someone. Your website should basically be viewed as an extension of your store. So if a customer was to walk into your showroom now, he or she should be able to see on your website exactly what they're seeing in your showroom. It's just one of many channels, your website, that consumers can interact with the view and decide whether it's very trustworthy. Optimize your online and offline channels. Create a network of constant quality content and allow your consumers to decide which channels and processes and methods that will best suit them. Not everyone wants to buy a car online, but everyone wants the option to do this. From the poll earlier, consumers said that it's ease of process, level of trust was the main two. If we can see how you guys voted. Should be able to see the comparisons there. So most people are basically saying within 35% that price paid is a little bit different, slightly different to what the consumers are interested in. They want an easier process, whereas only 15% of dealers or people watching this have agreed to that. Thank you for your time.
That's great, Alan. Much obliged. And over to our final speaker today, Martin Hill. He's Group Director of Strategic Partnerships with AutoProtect and Dealtrak. Martin will look at how dealers can increase online take-up of insurance and value-added products and other issues. Over to you, Martin.
Hopefully everybody can hear me okay. Thank you for the opportunity to be able to speak this afternoon. I'll start off, if I may, with why we've talked about finance and the whole F piece throughout today's webinar. But why does the insurance and the protection packages, the value-added products piece, why does that make a difference? And the reason it makes a difference is because customers' behavior is significantly different here. So let's just take a look. For some reason, it's not moving forward, my slide. Just bear with me a moment. Oh. Okay, let's try again. Wonderful. Okay. So why does this matter? Well, first of all, in terms of pressures on profitability, the insurance opportunity is very important, as we just mentioned. Consumer behavior, as we've seen in the previous slides and presentations, are changing. The sales processes are also changing. Those that are designed for the showroom obviously also need to be able to accommodate other channels as well, such as digital. And lastly, it's very easy for a consumer to go out and buy insurance products and value-added products elsewhere. So if we don't sell them as dealers to them, then somebody else will. So in terms of, I won't spend too much time on this slide, but this is from an OC&C survey and analysis of research. You can see that the top part of this is where there's a lot of positive things happening in the marketplace that could affect our industry over the coming years, short to long term. But the majority of stuff at the bottom is around what could be perceived as net negative. So everything from regulation through to macroeconomic factors, agency model, and so on. There's a lot going on within our business, and what we're trying to do is still obviously make a good living and to sell as many vehicles as we can. So in terms of insurance in an omni-channel world, hopefully there'll be 3 recommendations at the end that people can act on immediately, and also throughout the presentation, hopefully some other areas that will also give you some food for thought and stimulate some debate. So in terms of changing customer expectations from customers are changing, and as the commentators on the slide here have seen, is kind of outpacing what the industry has traditionally offered in terms of a customer process. So whether it be outdated, it's a moot point, whether it be a shift of 10 years progress in 10 months, these are all very, very relevant comments that have been made by leading people within the industry. And there's no doubting that people's expectations are changing hugely. And underpinned through that is the whole consumer mindset that has shifted from being sold to actually choosing to buy. And that's a fundamental difference. Whereas in some scenarios, people have actively been presented with various products to combine with their finance package in a set order and so on. But now, in terms of giving people the choice to buy and actually allowing them just to look at what the options are and to make up their own mind and customize their own offering, that's now very much the way that consumers are choosing to engage with us, as we've heard from the previous presenters. So in terms of giving customers choices, if we use a couple of examples, I've got the Sky broadband and Sky TV here, and also Virgin Media for mobile phones. If you're engaged with these companies, then one of the things that you do is you actually are given various options to choose from, and you pick and choose from this menu and select your own customized package. And I think one of the things that I've seen often is that within the motor industry that happens to a degree, but I do think that there's some significant room for improvement, particularly around the insurance and value-added product piece. So as OC&C have shown us, 38% of consumers are willing to pay a premium for a set price bundle of services. So those bundles of services, whether it be, I'm sure everybody has come across examples like Cinch Care and so on, where there are examples of protection products that are bundled together into a monthly price. It's about making it easy for people to make that buying decision, and it's a fundamental change. So some examples of how the consumer's mindset can be shifted. Well, one of the first ones with regard to data that a lot of people on this webinar will be sitting on, some of you will be sitting on huge amount of consumer data. And in terms of artificial intelligence and machine learning, I think it's perfectly feasible, I know because it's something that we're actually doing, to build a propensity model. In other words, rather than simply offer set products or set products in a certain order, why can't we use the data that we're sat on to actually construct something that is more meaningful for that consumer? So the deal that they have, the car they're buying, the finance package they're using, how long they keep the cars, all those sorts of things, we can start to, over time, draw a propensity model out of which particular add-on products people are more likely to take. The personalization of offers is really important, whether it's online or, I believe, in the showroom. I think there is something that we refer to as product fatigue, where people are simply presented with one product after another until hopefully somebody ends up purchasing some of these value-added products. I would be aware of that very much and give the people the opportunity to select their own. It's also possible through click out or click through journeys to actually go through a complete product sale from initial awareness of the product all the way through to product fulfillment, and in many cases activation of that product and putting them on cover. So that's something that is being done now. And last but not least, another example of shifting that consumer mindset is for used cars where the car is in stock and you know it can be delivered within a certain number of days, then it's possible for somebody to complete the purchase of an insurance product online. If it's a new car, particularly with supply issues that we have at the moment, that's not always possible. So one of the things that we work on and we recommend that it's possible to actually reserve products for later purchase, so people can register their interest in these products now, and it builds you up a good insurance pipeline for when these vehicles, new vehicles, for instance, come into stock, and it means that we get a good shout at increasing our performance with each of these newer units. But another point here is that finance and insurance works incredibly well together. So this is an example of a survey, some research that's been commissioned by a UK lender that says, and if you look at the top left corner there, that 71% of people that are funding vehicles went on record as saying that they were aware of add-on products, whereas the people that weren't funding the vehicles, only 44% of those are aware of the availability of these products. And then if we take it to the next level, 89% of finance customers actually have had in the past some form of an add-on product. So they've actually purchased and had experience of it, whereas less than half of all of the others have actually done that. And so what this particular piece of research shows us is that finance customers are very attitudinally positive to add-on products, more so than any other group. And so as a result, if you look at the finance customers that have previously bought Gap as well, 49% of finance customers at some stage would have bought a Gap insurance or similar. And I think the point that comes from this particular slide is that finance, which a lot of my colleagues, the other presenters have spoken about today, is a significant enabler and an accelerator for product sales. So at a time when the FCA, for instance, have looked at maybe reducing the latitude that we have as dealers to get finance commission, then isn't it great? I think it's great to know that it's possible to complete or to get other sales into the mix to help to bridge any gap. And in terms of when people buy these products, again, the research that we've seen that's been commissioned shows that there is a sweet spot around about when people are arranging the finance or when they're purchasing their car. So at those particular times, they're the best times to actually present the value-added products. So it makes perfect sense to have a really solid insurance and value-added product strategy around those times, both for online and in showroom. But note that there are still a percentage of people that are more than happy to discuss after buying the vehicle within a couple of weeks to discuss products. And I think that really plays to maybe a question for everybody: how robust is your post-sale insurance or value-added product strategy if you have one? I think the other point as well is that this does work. This research is being borne out in practice. There's one AM100 top 20 group that has seen a near doubling in increase in product penetration by focusing on the areas during the process when financing is involved, when these products are presented. So it works without a doubt. In terms of giving people choices, of course, it's possible to put anything online. Any value-added product, whether it's insured or non-insured, can be placed online. But there are some that are maybe perhaps better than others. And one I'd like to talk about is the minor damage products. So in our case, whether that's a smart insurance product or a non-insured maintenance plan. And the idea is here that this isn't a high-risk product in the eyes of the FCA. So it doesn't come with the gap moratorium, for instance, that a higher risk product does. So it's ideal for putting online. Secondly, most car dealers, with some notable exceptions, will go for maybe gap insurance and extended warranty as their major products. So if you put something like Smart online, then there's less risk of cannibalizing what you're currently doing in the showroom as well. So I think there's also an argument for putting that online there. There's a very high customer claim rate, more so than most other value-added products. In fact, most people, if they buy this sort of product, minor damage, will end up using it at some point. And of course, most car buyers have had that experience of someone opening a door on the supermarket car park and denting their own door. So they know it's inconvenient. And last but not least, and again, playing back to how the insurance and the finance products work well together, the condition of the vehicle is paramount. So if the vehicle is on a personal contract hire or even a PCP, when that vehicle goes back, then the condition is assessed. So minor damage can help to make sure that you get a better deal when you hand those sorts of things back. So again, this is about building that compelling case in the customer's eyes. So in terms of a summary here, in terms of giving customers choices, the Auto Retail Networking report that came out showed us that successful retailers will offer customers a mixture of online and physical services, but this must include a full complement of digital options. And so for me today, what I really wanted to stress was that although the financing of the vehicle is undoubtedly the enabler that makes that vehicle affordable, you know, in terms of the protection packages that can align very nicely with the financing of the vehicles, let's just don't forget that there are various options also that can be coupled with it and make it a much better sort of experience for the customer. So in terms of actions on this particular from this particular webinar, there's a couple of things I would like you just to take away if you could. First of all, in terms of a quick review of your sales process, are you actually selling, or are you allowing the customer to choose to buy? And as we said earlier, there's a big difference between the two. Secondly, looking at the online presentation of products and services and how they align with your finance options. Are you presenting any choices at all? If so, are you presenting them simply? Are you presenting them compliantly? So, of course, for regulatory purposes, of course, these are still regulated activities. And also review your product range. So are you offering products and services that customers would actually wish to buy? And last but not least, make sure that the compliance arrangements are reviewed. So this is continually evolving, and we need to make sure that we obviously stay on the right side of the rules. That's it from me. My email address is just there, or if anyone wants to reach out on LinkedIn, then please do. I'm more than happy to chat with anyone with regard to how finance and insurance could be more easily incorporated in together. But thanks very much for your time and attention. Back to John.
That's great. Thanks, Martin, and indeed thank to all the panelists today. We've got a few questions from viewers. I'll just kick off with one for John at iVendi. John, you've talked about traditional dealers and how they compete with the digital disruptors. What steps can retailers take towards offering a comparable online journey?
Well, I think there's a general perception that the digital capabilities of the major new market entrants require a level of investment and access to expertise and infrastructure that's just beyond the average dealer. But that's simply untrue. The technology needed to create this kind of an online journey, it's achievable for even the smallest retailer operating on a local level. I would say start by assessing your current online journey and identifying any gaps. The key functionality is making sure you've got great vehicle images and descriptions, including trust factors. So you want your reviews, your star ratings from Trustpilot, finance checking, finance applications, and of course, the ability to communicate and negotiate with the consumer, because we know that most buyers are going to need some kind of a support from a concierge-like service.
That's great. And Nick, I've got a question from you. You deal with so many dealers on your books. Do you have any examples or case studies of a company that is utilizing digitalization and is really successful? Something that stands out for you?
Yes. Thanks, John. Yeah, that's a good question. Well, actually, we can actually look to the States. Because CarMax in America are a super successful company. I'm sure John is aware. But they're absolutely, they have sold 750,000 vehicles last year, and with an 11% gross profit margin. So they're really successful. And what they're doing right is they're nailing digital. They're using data, technology, and experience. They use technology to they create things like a recommendation engine, so that when people are looking at the cars on their site, they say other people who looked at these cars also looked at this, very much like you have on Amazon or on Netflix. They're using technology to make their cars appear ready to be advertised quicker, so they can turn a dirty looking car into a quick car with technology. So they're nailing technology. They're using data to make sure they're pricing the right cars in the right areas. So they have various sites. They can move the vehicles to the sites which are selling where the demand is the highest, very much like some of the tools we have on Autotrader. They can actually see demand for your car or for the type of car. So they're priced to the market. And then they also allow you to do everything you want to do, how you want to do it. Say, well, you can pick up the car at home, you can have the car delivered, you can go to their site to pick it up. They allow you to buy the vehicle the way you want to buy. So CarMax, they are in America. If you have a look at them, they're leading the charge in digital retailing.
Okay, that's great. Thanks a lot. And Martin at Dealtrak, you were talking about bundling of services. Can you give me one or two examples of a company who's doing that really well?
Yeah. There are several examples out there, John, at the moment. But I think that an example of something like Singe Care, I think I may have referred to it in my presentation. There are products that customers can obviously take advantage of, such as service plan or extended warranty, maybe some paint protection or other products. And so that's a great example of putting something together in such a way that customers know exactly what they've got. So it's all perfectly clear and above board in that regard. Some of these products, not necessarily in Singe's example, some of them are not insurance-based products, so there's not perhaps as many regulatory considerations to also look at. But the idea is that by bundling together, the customer gets an opportunity to, in some cases, choose, and in other cases to say, well, that bundle is right for me. And it's done in a very manageable and easy way. So, for X per month, you can just tick the box and it's applied to your basket. So very easy to do. And also, I think some of the better examples where I've seen it working well is it's been accompanied by extremely high quality collateral as well that's extremely engaging. So video content that's not too long, video content that renders well depending on whatever device you're looking at it on. Those sorts of things really gain the customer's engagement, and together with a relevant call to action, I've seen evidence of many dealer groups now where they're engaging with people around these ancillary products connected to the funding of the vehicle. So yeah, there are several examples out there that are very valid.
Yeah. Okay, and last question for John. You mentioned in your presentation about, you were talking about Google and Amazon entering automotive. How can retailers make the most of the Google Ads, vehicle ads platform once it reaches UK?
Yeah, sure. Thanks, John. So the new feature brings loads of benefits for retailers who advertise their vehicles online. But one of the ones that I find most interesting as a marketer is the automated targeting, which allows retailers to segment their campaigns by location and interest. GVAs will also provide retailers with better visibility over which of their online ads is working, which is obviously really key when you're making decisions about your ad spend.
Okay, that's good. Okay, I think we've nearly run out of time. Can I do a quick around the panels in terms of a takeaway, if our dealers listening in? Nick at Autotrader, is there any big takeaway for you, something that they should do once they leave here?
Hi, John. Sorry. Yes. Something they should do is I didn't mention it, but it's simple, easy, quick, and transparent. And it is something that all of us have mentioned today. And it's keep making whatever you're doing as easy as you can. And that sounds facetious, and I don't mean it to be. But if you put any blockers in the way, if there's anything that's stopping me from doing something, what's that going to do to me as a consumer? Psychologically, that's going to make me stop and run away. So if there's anything that is stopping you from selling whatever you're selling, don't have it there. So look at your product, whatever you're selling, look at your product with a fresh pair of eyes. So it's easy, so it's transparent, so it's convenient for everybody.
That's great. And Tamara, any suggestions of your part?
Yes, John. I think consumers want to take control of their car purchase process. And I think it's extremely important that dealers think about that, put themselves in the consumer's shoes, and think about that omni-channel experience. Let the consumer choose what they do, when they do it, whether they flip between the showroom experience, the online experience, or a bit of both. But think about that when you're choosing your partner.
Great. Okay. And finally, Martin at AutoProtect. Any suggestion?
Yeah, I think I did refer to it slightly in my presentation, but for me, if we're looking to make any decisions around online or showroom or the omni-channel approach, I would suggest that we make those decisions based on the data that we have available to us as much as possible. Data-driven decisions tend to be the best ones, but also because we're dealing with finance and insurance, if we're dealing with data-driven decisions, then for me, that's always a good a bit of a thumbs up from the regulator, in that we've demonstrated that we've not kind of gone off on a gut feel or whatever. We've put some science behind it. So I think that can only be good. So yeah, use data wherever you can. Okay,
that's great. Okay, that's about it. We're almost out of time. So thanks to our panelists, Tamara, Nick, Joanna, Alan, and Martin, and to all of you out there who tuned in today, and to the webinar sponsor, V12 Vehicle Finance. Wish you all the best for your business in 2022. Until next time, goodbye.
Bye.